I'd like to welcome to the stage for a not-for-profit's role in the capital-intensive power generation sector, Subak team. Maisie. Okay, I think we're going to get started, Matt. People will trickle back in.
Let's do it.
So presenting Matt Gray from TransitionZero with his talk. Thank you, Matt, for joining us today.
Great, thank you, Jake. Thanks, Jake, and thank you to Subak for inviting me to present today. We were actually the part of the first cohort. Yeah, so have known Amali, Lawrence, Brian Ege for a long time, and have a lot of respect for everything that they've done for us. So what I'm going to talk about today is just give a bit of an overview of the power sector in the context of what not-for-profits do, then talk through some of the roles that not-for-profits play and the angles that they take to instigate change. And then I'll just give you a couple of examples of what we have done and how we have collaborated with other organizations. So just by way of introduction, so TransitionZero is a registered UK charity, entirely grant funded. Our funders are at the bottom there. We're really fortunate to get funding from some of the biggest foundations in the world. And what we do is we organize, analyze, and integrate data with the goal of putting that data in the hands of the right people in the right way at the right time. And we typically work with corporations and governments and emerging market economies. So just to give a bit of context with regards to the power sector. So this is what we need to do with regards to decarbonizing the power sector. And there's a couple of things that come out of this chart here. The first is obviously we've got to wind down fossil fuel consumption and dramatically expand clean energy. And that clean component includes nuclear and large hydro as well. But the issue with the power sector is threefold. So firstly, due to the electrification of everything and that mega trend that gets talked about a lot of the time, that means that we have to decarbonize the power sector first. Otherwise, that electricity that's going to be generated is going to be powered from fossil fuels, which of course will make the decarbonization challenge a lot harder. The other important consideration is that I think the power sector, like a number of heavy industry sectors, is pretty, how would I put this, archaic and is not used to disruption in the traditional sense. And the main reason for that is assets are long life assets. So a coal plant, for example, that gets built today will still be around in 40 years' time, potentially longer than 40 years, if it isn't taken offline. And there's a reason why that these coal plants don't get taken offline in the sort of traditional way that you see economics making other technology obsolete, is because of long-term contracts. They're called power purchase agreements. And I'll sort of go into some more detail about how we're thinking about dealing with that fundamental problem. So with regards to not-for-profit roles, I think how we think about it is there's 5 different types of not-for-profits, and they're all doing different things, but interacting in a synergistic way. So at the top, there's organizations like Extinction Rebellion, who are in the news every other day, and they use sort of stuff like civil disobedience to instigate change. So blocking highways, gluing themselves to buildings. I think I've seen that happen as well. And then there's brands, so organizations that try and contaminate brands. Examples of that are Greenpeace, and this is sort of the, I think the genesis of the divestment movement. So getting banks, institutional investors to phase out their investments in fossil fuels, I think was vanguarded by these types of not-for-profits. And then you go down to stuff like narratives, and this is where EMBA, which is another Subak cohort member, produces an analysis to influence some of the tier one newswires. So I'm thinking The Economist, the FT, Bloomberg. And what that does is it sort of presents a narrative that is, I think, positive and consistent with what we need to do. Fundamentally, I think the cost of these technologies is getting cheaper. And the economics is now on our side, but there is vested interests that are preventing from that view from being well known and well understood by the public, and that's where organizations like EMBA really come in. And then there's convening, so the likes of the climate group, a number of initiatives that they're involved with, so sort of the RE100, the Race to Zero, the Below 2 or Beyond 2 initiative. And what these organizations do is they bring governments and corporations together, and it's typically voluntary based. So again, these organizations, I think, are really the ones who have pushed the net zero by 2050 agenda, which I think on one hand has been enormously powerful, but on the other hand, I think we really need to sort of move beyond these performative PR exercises. And that's where the last type of not-for-profit comes in, where it's really solutions orientated, working directly with industry or with other not-for-profits to provide data to accelerate the transition. And the example there is What Time, which is a San Francisco not-for-profit that has a technology or tool called automated emissions system, and that is something that is an Internet of Things technology that allows consumers to choose their type of electricity, with the idea of ramping up during times when the grid has lots of renewables and ramping them down when they don't. In terms of TransitionZero, I think two things to mention. We operate the narratives and solution space. And we actually, besides Extinction Rebellion, we've actually collaborated quite closely with all of these organizations. So for example, we're a coalition member of Climate Trace, which is something we started with What Time. We are helping out the climate groups, states and cities program with emissions data. And we've known, I think, the team at EMBA for probably half of my adult life, sort of predating the days when EMBA was Sandbag. So just to give some context with regards to what we do and how we sort of take data and turn it into concrete action or impact. So this slide here shows a coal plants in China. All the blue dots on those maps are coal plants. We've just isolated one. And what we do is we apply data science and economic modeling and produce what we term actionable insights to influence policymakers or corporations, depending on what we're trying to do. So in terms of the data science, we use satellite imagery and ML techniques to estimate the production of coal-fired power plants. And once we know the production or the productivity of coal-fired power plants, we can then turn that into economic insights. So that chart there is showing on a real-time basis the profitability of that coal-fired power plant over time. And this is a data point that isn't available because the Chinese government doesn't make the coal plant operators, doesn't make them make this production data available. So we've created a technique to estimate that. And then what we do is we write reports and tell policymakers what we think they should be doing. And just to sort of translate this into a concrete outcome. So going back to the previous slide where we talked about the types of not-for-profits, so in terms of the narrative component, so the report that we produced called Turning the Supertanker was really successful in the press, generated a lot of press attention. But perhaps more importantly, because of our relationship with Climate Trace and the role that Al Gore has with Climate Trace, we managed to leverage his network to get that report in the hands of the Chinese climate envoy, which was meeting with John Kerry at the time. And according to Al Gore, obviously we don't know for sure, that report had an impact or influenced the Chinese climate envoy, which is, I think, as a predominantly research organizations, a real thrill to see your work having impact. Just one more example before I open it up to questions. This is another live topic or subject that we're working on at the moment. So there's this growing trend which came out of COP26 in Glasgow last year to refinance coal plants, to close them down early. Like I mentioned in the previous slides, closing down coal plants, regardless of their economics, is very challenging because they are sheltered from economics in the conventional sense because of these long-term contracts. So typically in emerging markets, when a coal plant gets built, they will sign a power purchase agreement, which will largely be risk-free for the owner, guaranteeing revenues for a 40-year, sorry, not a 40-year, 20-year period until the debt's paid down, meaning that regardless of the competitiveness of that asset, which increasingly coal plants aren't competitive at all, there will be that lock-in of that asset because it'll just be completely sheltered or completely immune to any economic trends that we're seeing, especially with solar and wind on this deflationary renewables trend. So we decided to get involved in this, and what we did was we put together a database estimating the cost of buying out these coal plants. So how much would it cost to pay off the holder of the power purchase agreement? And then we believe that that information can be given to the finances, the multilateral development banks, and the donor countries who are giving the finance in the host countries. So more transparent and accountable decisions can be made. This analysis is being released next Thursday, but this is sort of a sneak peek in terms of what we have found. So this chart here shows the abatement cost of all the different coal plants in Indonesia on a $1 per tonne basis. And this $1 per tonne basis is how much would it cost to pay off the owner of that power purchase agreement, and how much emissions would you save as a consequence. And what we can do is then rank those assets to encourage those parties who are involved in that deal to buy out the cheapest assets first, because this money that is being used to refinance coal is effectively public money, and therefore we believe that these deals need to be scrutinized by the taxpayer and the energy consumer. And I mean the taxpayer in, I guess, the most holistic sense, because there is a transfer of money from the global north to the global south. And I think if it gets out that money is being wasted, or these deals are not making the most effective use of the public finances, then that will obviously cause a reaction. And what we also did, just to sort of showcase some of the potentially cost ineffective decisions that the Indonesian government is thinking about, is we priced up the dollar per ton or abatement cost of a CCUS project that they are considering doing in Indonesia at this moment, or Shell. And we think that that has a dollar per ton cost of $130, which is very expensive compared to what they could be doing just to shut down coal. And I guess just final point before I hand it over to Q&A. We will be releasing that report next Thursday. The webinar will be on Thursday as well, and we'll be giving a number as to how much we think the Indonesian government needs to shut down its coal plants, which is, I think, a big discussion point coming into COP27 in Egypt this year. So hopefully that that data set will increase transparency in the run up to COP27. And hopefully we'll have another successful story to tell. Maybe we should get in touch with Helga again to help us out with that one. But on that note, that's my slides, and happy to receive any questions that you might have. Yep.
Hi, Matt. Absolutely love that talk. Very insightful. A little bit scary as well. A couple of things, like, how are the Chinese government okay with you having satellite intelligence of a coal plant, but not going to share the output of a coal plant? Just a little interesting one there. Secondly, is this data available for people in the room to take a look at? And finally, adding up that cumulative data that you had there on a per ton, what is that actually in dollars or pounds, euros, Bitcoin?
So on the first question, I mean, I think that the unique or sort of commonly misunderstood thing about China is that I think there's a perception that there's the Chinese central government, there's 12 guys in a room making decisions for this huge country, whereas with regards to the power sector, that's sort of never really been the case. So what we have found with our data is it's actually welcome from the central government, because they sometimes don't have control with regards to what the local governments are doing. And that's because China's enormous, decentralized in ways that the West isn't. So with regards to power infrastructure and planning, the central government sets the targets, but that's pretty much all they do. It's up to the local governments to spend the money and execute those plans themselves. And that is a good thing in the sense that it explains why the Chinese have the ability to build stuff so quickly. But it also does lead to these perversities with regards to data falsification and cheating, I guess, which has sort of come out a lot recently with regards to their carbon trading scheme. So we haven't found any difficulties with regards to showing that data. I guess the problem we face with regards to China is there's no way of validating our data unless the operators tell us, and they don't tend to. With regards to your second question, I think you have to wait till Thursday when we release the study. I mean, what I would say is that there was a newswire or an article a couple of weeks ago from a senior figure in the Indonesian government saying that they need 600 billion to shut down their coal plants, and our analysis is much less than that, much. And that's where I think, you know, the not-for-profit community can have a role, because all of our data, all of our assumptions is on our website, Excel spreadsheet, every plant, every metric, every assumption can just back calculate everything that we have done. So it is, you know, it can be scrutinized, which I think asks your other question with regards to the data. So the Chinese report, yeah, you can download the Excel spreadsheet with all that. Yep.
Thanks. Thanks a lot, Matt. Quick question, actually, just on the not-for-profit side. Why did you choose the not-for-profit route? Is it because of the because you wanted to make sure everything was open and transparent, like you were just saying that all the data is shared and not protected, or was it largely because for what you're doing, it's going to be very hard to get a decent business model out of it through another route, through for-profit route?
Yeah, I mean, I think the answer to that is probably the algorithms that we had developed previously were part of a not-for-profit grant. So how TransitionZero came about was through the Carbon Tracker initiative. We released this study called Nowhere to Hide, which Lawrence wrote the code on. And that sparked some interest about this sort of using alternative data to drive impact. And what we did is we applied for a Google grant with WhatTime, got that grant. But what that meant is everything that we had to do was open source or could never be commercialized. And I think that created, you know, that path dependence. And also, you know, when we spun out of Carbon Tracker, we had the funders there wanting to continue to support us. So we sort of knew we could get going immediately. And I think we just decided to do that.
Okay, thank you, Matt. Fantastic talk. Thank you very much.
Great. Thanks, everyone.